If there is a conviction, what happens to markets tomorrow? Very simple.
I think markets crash tomorrow if there's a conviction.
Fox predicted a market crash if Trump were to be convicted. And then the Dow Jones Industrial Average on Friday had one of its best days of the year, climbing nearly 600 points. Take a look at this. This is video of Fox News guest John Carney from Breitbart saying on Thursday, if today Trump gets convicted, the market is going to crash. It could be thousands of 1,000 points or 2 percentage points. It's going to be terrible. Listen to this.
I want to get John in for one final comment. If there is a conviction, what happens to markets tomorrow? Very simple.
I think markets crash tomorrow if there's a conviction, but I think they will bounce back because, look, even if they put Donald Trump in jail, I think the American people will vote him into president. We will vote him into the White House right out of the New York City jail. It's an outrageous trial, and people can see.
But if there's a conviction, you think there'll be a crash?
I think the markets will do very badly.
What are you talking about, 1,000-point loss?
I think we'll see at least a 2% drop.
Okay.
Wow, what a strong prediction. The market will crash because Trump gets convicted. But then when people realize he'll be president from prison, that will have such a stabilizing effect on the country that the president will be in prison, that then it will boost the market again at some point in the future. Well, you know what happened? The Dow didn't lose 1,000 points. The Dow was up almost 600 points on Friday, one of the best days of the year. So then what do? When their bogus predictions are contradicted by fact, they simply revise and find some new way to justify what took place. They reverse and check out the comments to my tweet here in a moment. People say Trump's conviction is giving confidence that he will win. And that's why the stock market is going up. I tweeted tongue in cheek with an image of the Dow climbing. As you can see, the markets are reacting very negatively to Trump's conviction. Of course, that's a joke. The markets reacted very positively. And without a shred of irony, nor dignity, I would add, some of the people responding to me saying, quote, probably because they think his odds of winning went up, to which I responded, hardcore copium. But more importantly, Trump's odds of winning seem to have declined since the verdict, at least based on new polling, which we discussed earlier. So, I think the stock market is a very interesting tool to use because you can project onto the stock market. You can project your dreams, you can project your desires, etc. But the interesting thing about the stock market as a tool is that it's just numbers. You could just look at the numbers. And as many of you remember, Donald Trump made a prediction in 2020 that if Joe Biden were to win, the stock market would collapse, everyone's 401ks and other retirement accounts would be worth nothing, and it would be a 1929 style depression. Of course, that hasn't happened. And in fact, we've seen in the stock market record after record after record, all-time high, which if initially MAGA people just ignored, when they couldn't ignore it, they started to say, well, the reason the stock market's doing well is because of the expectation that Trump is going to be president. Now, again, Trump is predicting if Joe Biden wins this November, you're going to get a 1929 style crash. The stock market will be in the toilet. It's going to be terrible for everyone's 401ks, retirement accounts. In a perfect world, or even just in a sane world, no one would fall for that yet again. They seem to be falling for it again based on the Twitter replies where people are saying the market is up only because of the belief that thanks to Trump's conviction, he's going to be president again, which I find extraordinarily difficult to believe as an explanation. And then finally, I do think it's important to mention, and I know most of you know it, but if I don't mention it when I talk about the stock market, people will get mad. They'll say, David, the stock market isn't the economy. I'm not claiming that it's the economy. What I'm claiming is that the behavior of the stock market is directly contradicting what the MAGA people have predicted and told us would happen. If Biden wins, it'll crash. It didn't. If Trump gets convicted, it'll crash. It didn't. Oh, well, it didn't crash because everybody expects Trump's going to come back and Trump is so good for the stock market. Except we've run the numbers. And if you go back as far as we have stock market data, since the political realignment where Democrats and Republicans are more or less what they are today. Stocks do better under Democratic presidents. So that's sort of like the final nail in the coffin of that hypothesis. So just not going well. The predictions really not going well. And we will ultimately see what happens in terms of a bounce back or not. And Trump's presidency. Later in the show, we'll talk about what those paths might look like. So let's take a very quick break. Still available, the Memorial Day discount on membership. If you want it, let me know. Still 30 or 40 people a day signing up with that code. If you missed it, if you want it, email info@davidpakman.com and say, David, please give me that code, sir. One of our sponsors today is Tychos, which provides an awesome free weekly 5-minute video series about the economy called The Weekly Comment. And it's hosted by Richard Vague. I've always found Richard Vague to be a premier economic expert. He's the former Secretary of Banking and Securities for Pennsylvania. And every week, Richard is covering economic topics that keep you up to date, really looking at the key economic issues of our time: U.S. debt, income inequality, forecasts for the American economy, economic challenges that are facing Europe and China, innovative policy ideas. Richard is the author of economic bestsellers, including A Brief History of Doom, The Case for a Debt Jubilee, and his newest book, The Paradox of Debt, which is a really interesting look at how government deficit spending in the U.S. during the pandemic era mostly benefited the top 10%. The $6 trillion in government deficit spending in the U.S. in the nearly 3 main pandemic years increased household wealth by $31 trillion. That's the paradox of debt, according to Richard Vague. And in his weekly video series from Tychos called The Weekly Comment, Richard is excellent at taking really complicated economic issues and making them accessible to anyone. Go sign up for free. The link is down below.